Greetings, everybody. Welcome to Liberty Call. Today is, what day is it? Wednesday, May 17th, 2023. Hope everybody's having a good day out there in the interwebs. Looks like the markets felt pretty good today. Everything was up over 1%. But little curious as to why. But looking at the statistics that came out today, we did get a housing seems to be doing pretty good, and consumer spending seems to be pretty good since based on the articles that we're going to cover today. So again, if it's your first time watching Liberty Call, I'm glad you're here. Thank you very much. Please give me some thumbs up, likes, shares, subscribes, follows, all that good stuff. I would greatly appreciate it. And let's go ahead and jump into the numbers for today. Dow Jones was up 1.24%, 408 points, closed at 33,420. S&P 500 was up 1.19%, closed at 4158. NASDAQ was up 1.28%. The VIX fell 6.23% today. It's down at 1687. Canada was at up 0.27%. Brazil was up 1.17%. And Mexico was down 0.21%. Germany headed over to Europe. Germany was up 0.34%. UK was down 0.36%. France was down 0.09%. Netherlands was up 0.27%. Spain was up 0.22%. Italy down 0.01%. Switzerland down 0.71%. And Portugal down 0.39%. Excuse me. Both Russian exchanges were in the green. MOEX was up 0.03%. The RTSI was up 0.86%. And over in Asia, the Nikkei in Japan was up 0.84% last night. Australia was down 0.49%. New Zealand was up 0.11%. In China, the Shanghai was down 0.21%. The Shenzhen component down 0.07%. China A50 down 0.71%. DJ Shanghai down 0.2%. Hang Seng down 2.09%. And the Taiwan weighted came in up 1.6%. All right. So like I said, everyone seems all excited and happy about what's going on in the markets today. But, looking at the big picture, nothing changed since yesterday or last week. So I'm a little curious on what's going on. All righty. Today's market recap. Dow rallies 400 points on debt ceiling deal optimism. Well, that's probably what it is. Everybody seems to think the debt deal is going to get solved. But it's not really going to solve anything. I mean, unfortunately, we still have all the debt. And there's really no solution on paying it down or paying it off. If people were talking about that, then I might get excited. But anyways. All righty. On Wednesday, U.S. stocks surged as hopes that a potential agreement on the debt ceiling negotiations would be reached, while retailers continued to report strong first quarter earnings. Lawmakers are currently working to come to an agreement on the debt ceiling as the deadline for when the U.S. risks a default rapidly approaches. After a meeting with President Joe Biden at the White House on Tuesday, top-ranking lawmakers expressed optimism that a default would be avoided. Oh, well, hey. Problems are solved, people. Calm down. Biden has cut his trip to Asia short to focus on resolving the issue. Oh, that's nice of him to do. Meanwhile, several retailers released their first quarter earnings reports. Target Corporation reported numbers that beat first quarter forecasts, but offered a second quarter profit outlook that disappointed investors, indicating that consumers are putting off some discretionary purchases while they spend more on household necessities due to inflation. Well, duh. TJ Maxx companies, the parent TJX companies, the parent company of TJ Maxx, fell short of revenue estimates for the quarter. Despite this, Target shares closed up 2.6%, while TJX company shares closed up 0.9%. In addition, Western Alliance Bancorp shares rose 10% and led the other regional banks higher after it gave an update on deposits, which continued to rise in May after the banking industry turmoil that occurred in March and April. Meanwhile, shares of other regional banks such as PacWest and Zions rose 21.7% and 12% respectively. Tesla Inc. shares rose 4.4% after its annual shareholder meeting, where CEO Elon Musk stated his intentions to remain in the role at the electric vehicle maker. The company plans to start delivering its highly anticipated Cybertruck later this year. That thing is ugly, and I'm a truck guy. I love trucks. I drive an F-350. I've had, I've had 3 F-150s and a Ford Ranger before that, and a couple of Explorers along the way. So I like my trucks, but that thing is just hideous. I don't know who would want to buy it. Plus, it's electric. I mean, electric trucks are just garbage. I saw a thing on the TV earlier that Ford was losing. I think they lose $40,000 or $60,000 on every electric vehicle made. That's not a good idea in staying in business. All right, and then finishing this up, April housing starts were about even with expectations, but the numbers for March were revised lower. Initial jobless claims for the previous week are due out on Thursday. Earnings expected on Thursday include reports from Walmart, Alibaba, and Bath and Body Works. Overall, the positive news on the debt ceiling negotiations and the strong earnings report from retailers helped boost the U.S. stock market today. All right. So I guess everybody's all excited about the debt deal, and we got some decent numbers coming out this week. So I don't know, folks. Be careful out there. All right, next up on the docket, U.S. single-family home building permits at 7-month high. Housing slump persists. Let's see here. So it's kind of, permits are up, so housing in that respect is up, but then sales are down, so it's kind of disjointed. Building permits for future U.S. single-family home construction reached a 7-month high in April, marking the third consecutive monthly increase, according to the Commerce Department. This gave the struggling housing market a much-needed boost. However, tightening credit conditions could create obstacles for builders to obtain financing for new projects. The increase in single-family permits, which rose 3.1% to a seasonally adjusted annual rate of 855,000 units last month, was driven by a 59.5% surge in the West, which had previously been hampered by bad weather. Yeah, like out here. Rain like crazy. Permits in the largest segment of the housing market rose in all four regions. However, the pace of single-family home completions fell to a 15-month low due to shortages of transformers and other building materials that have recently been cited by builders. Meanwhile, permits for housing projects with 5 units or more fell 9.7% to a rate of 502,000 units, the lowest levels since December of 2020, due to the rental vacancy rate rising to a 2-year high in Q1 and stock of multifamily housing under construction reaching a record high. This has limited scope for more new construction. Economists predict that while the increase in single-family permits and resilient homebuilder sentiment will support housing construction in the near term, starts may lose momentum as the year progresses due to tighter lending standards and weaker demand due to recession. The Federal Reserve's fastest monetary policy tightening campaign since the 1980s has had the biggest impact on the housing market. However, the average rate of the popular 30-year fixed mortgage has dropped from a peak of 7.08 in November to 6.35% last week, according to data from mortgage finance agency Freddie Mac. Together with the tight supply of previously owned homes, this is pulling some buyers back into the market, allowing builders to break more ground. Single-family housing starts climbed 1.6% to a rate of 846,000 units last month, with data for March revised down to show a single-family home building falling to a rate of 833,000 units instead of climbing to a pace of 861,000 units as previously reported. The government also revised starts data from January of 18 through March of this year. Single-family housing starts dropped 28.1% year over year in April and remained well below their pace of at least 1 million units between July of 20 and June of 22. While there is still a long way to go, this increase in building permits for future U.S. single-family housing construction represents a positive development for the housing market, which has been struggling in recent years. Good stuff. All right, last up, U.S. consumer spending appears solid early in second quarter. Consumer spending in the U.S. increased solidly in April, buoyed by rising household purchases at online retailers. Restaurants and bars, according to the Commerce Department. Retail sales, excluding automobiles, gasoline, building materials, and food services, rose by 0.7%, rebounding from a revised March figure of minus 0.4%. The report suggests that while consumers remain resilient, inflation and interest rate rises are encouraging more selective and price-conscious behavior. Economists polled by Reuters predicted core retail sales would increase by 0.3%, while adjusted for inflation, they rose around 0.6% in April. The report also revealed that overall retail sales increased by 0.4%, missing economists' expectations of a 0.8% gain. The underperformance was attributed to a modest rise in receipts at car dealerships. Furniture store sales dropped by 0.7%, and receipts at electronics and appliance Stores fell by 0.5%, while spending at hobbies decreased by 3.3%, and sales at service stations declined by 0.8%. The report follows the publication of data showing that production at U.S. factories surged in April, adding to a strong job growth and increased home builder sentiment to suggest the economy is experiencing a revival after slowing down in February and March. U.S. Treasury prices fell following the publication of the data, while the dollar rose against a basket of currencies. The overall message is that consumer spending remains a key factor in driving U.S. economic growth, despite concerns over potential recessionary risks associated with the U.S. Federal Reserve's monetary policy. All right. So, again, could this be a blip? Probably. But, it gives people, a warm fuzzy in their tummy so that they're not so worried about everything that's going on in the world. But again, I don't think we're going to escape the carnage later on this year. And, we have to bottom out. The market has to capitulate at some point. Whether or not it's going to be in this quarter or next, I don't know. I mean, I follow the charts. The charts tell me what to do, and that's what I do. So, granted, I do some things on the side that, as far as adjustments, just based upon what's going on in the world. But, looking forward, do I think things are going to get better over the rest of this year or get worse? That's the question you should really ask yourself, as someone who invests in their 401k or in their personal brokerage account. Is the market going to go up or down based upon what's going on in the system right now? And, my probability gauge says probably down. But, again, I'm not going to, ignore things that are in front of me at this point. So, all right. Well, I hope everyone has a fantastical evening. Astros kicked the crap out of the Cubs again last night. Let's hope they do it again this evening. They have another night game before their day off. And then I think they play the A's this weekend. So if you're an Astros fan, we got two bad teams in a row. We got the Cubbies and then the A's. So that should spell some goodness for the good guys with the home team. So, all right. Well, hope everyone has a great night. I'll talk to you next time. Adios.